Well, ladies and gents, I am somewhere very prestigious. You can maybe recognize it, one of the most iconic places on earth, Wall Street. Not just that, we are inside the New York Stock Exchange. If you don't know, for almost 20 years now, it's been closed off. The public can't enter, no visitors, only if you have a reason to be here because of a trader on the floor. The Einstein of Wall Street, Peter Tuckerman, has very graciously let us in here. And I've had a wonderful opportunity to speak to a lot of traders, market makers, what really market makers are, speak to analysts, speak to not just floor traders, but fund managers. And through the show as well, Titans of Tomorrow, I've been able to speak to institutional traders, top tech analysts, fund allocators, AI and quant traders. The show, the podcast has really given me the opportunity to have a breadth of knowledge and speak to the greatest minds in the industry and have a front row seat to people that are pioneering in the space, from the future of finance, AI and quants, and how that not only manifested in the past, but how they're adapting to the future. And it can seem like a lot when I sit in these interviews and I'm hosting such prestigious names and even off camera speaking to some of the most phenomenal real market makers and traders. It does make me wonder, us as a little retail trader, what can we really do? How can we really navigate when we don't have the same access to the level of resource, information, talent, when they are pooling hundreds of millions of dollars, or they have a latency edge by trading on the floor? They have so many advantages above us. Can we really make it in the markets? Is the reality of a retail trader a facade, and you're better off just dollar cost averaging, long-term investing, almost swing trading in indexes where you know you'll get your 8 to 10% a year? Or should we really go to try and beat the market, no small feats, with our own intellect, our limited resources, and usually the internet and gurus around? My stance on it is, aside from my own personal experiences and my own personal career, for those of you that don't know, I'm a dentist. I went to university for 6 years, and whilst I was in my career, I made my first $1 million whilst I was a university student. Now my net worth is sitting between 7 and 8 figures. I have 7-figure stock portfolio, 7 figures in watches, XYZ. The markets has opened up the whole world for me. And then the markets has opened up businesses, opportunities, and connections. So I can vouch for it. And I can say the market is truly a wonderful opportunity, but you have to navigate it in a very specific way. Something that I really observed that I find fascinating is that the institutional investors, the institutional traders, the head of strategy of certain institutions like Bloomberg that I've spoken to, it shocks me how old-fashioned and traditional their approaches are. They really look at RSI, oversold, overbought, the MACD, indicators, a moving average, these very primitive things that we see on the retail space. When we look online, we see that that is the old way to trade, and the new wave, the new era, the new buzzword. And finding clarity in that can be a little bit challenging if you're trying to navigate it by learning through social media, courses, YouTube, etc. What I found particularly useful for myself was to ground myself in a few things. And those few things can be, no matter what strategy you have, you can ground yourself in these things. Number one is always going to be understanding probability and statistics. What that means is not only in your testing phase, in your data collection phase, in your back testing phase, in your live testing phase, beyond all of that, what I want to say by data is, and probability is, the degree of certainty you can have with limited information as a retail trader. I cannot know where the market's going to be in a year unless I look at something like the S&P, where it's just an appreciating asset. But if I'm looking at a currency pair, a euro dollar, it's very hard for me to know where it's going to be in a year, even if I have a great fundamental analysis, even if I have a great technical analysis, because market structure and trends will always decay on a long time horizon. Shorter term time horizons is the edge for a retail trader, because you can either try and piggyback on the institutional movement, COT reports, fundamentals, macros, but things can change quick. And recent events have really showed how things can change quick, where headlines, tweets, pause on tariffs, the tariff play, uncertainty, fear, greed, all of these mix of events in the markets was moving it. You could have had a long-term position play based on the tech sector, the AI sector, and being bullish. And then market changes because of current affairs. It's really hard to position yourself long-term in the markets if you don't have the same advantages the big players do. And even the big players, they struggle to position themselves when the markets change quick. I believe the short term is your friend, and therefore looking to be an intraday or intra-session trader is a better advantage as a retail trader, because we have limited access to information. We don't have an information advantage. Second factor that I consider is when you're trading confluences, there are many indicators that institutions are using, EMAs that institutions are using, support and resistance, trend lines, all these things everyone can see. And therefore I really struggle to see as a retail trader if we are following off the piggyback of technicals of institutions, but these institutions are not relying only on technicals. But we can't access the information that they have, then why would we only rely on primitive technicals? I think if you narrow your field of view to a shorter term time horizon and you understand primary drivers of the market, what I mean by that is session volatility, liquidity in the market. Primary drivers meaning what is a catalyst, whether it's fundamental catalyst or news releases throughout the week, or just technical catalysts, for example, supply and demand, market structure, zones of liquidity and manipulation inducements. All of these things will enhance your ability to forecast short-term time horizons with a technical dominance. I would definitely lean into that. And then the last thing that I think is paramount is understanding your data in terms of your own trading KPIs, key performance indicators. That's going to look like your desired risk to reward, your desired win rate, your desired rate of return, your desired trade frequency, your desired risk, and your profit-taking systems. Now, we can all have ideals, and the ideals would be high risk reward, high win rate, high trade frequency, high rate of return. But that's not the reality, because they all are interconnected and they usually have a payoff. The higher your trade frequency, the lower your win rate naturally will become, because you're less selective with opportunities. So something that helped me was understanding what is realistic. And for realistic, as a retail trader, which is different to the people I've been interviewing lately whilst I'm in New York, a realistic win rate is right around 50%. I think it's really difficult to try and hit those 60, 70, 80% consistency on a long-term time horizon, especially without fundamentally driven biases, which is hard as it is because we have limited information. I think a 50% win rate is very achievable, very consistent. Next is our risk to reward. A risk to reward profile of a 1 to 3 with a full volume is probably the best way in your first few years of trading. Of course, you can have dynamic risk, you can have dynamic partialing, you can do stacking entries, you can do so many things, you can do a trailing stop. There's many ways to get creative with your profit-taking systems. But if you have a 50% win rate and a stable 1 to 3, no partial, you can be in a very favorable position, especially if you are session/intraday trading. Because for you to get an average true range or average daily range, which on a euro dollar is 50 points, 50 pips, if you can get in on a 5 pips, 7 pip, 10 pip stop loss, you can get your 1 to 3 in a single day as long as you understood session movement, directional bias, and liquidity. That is very achievable once again. Risk, I would go super conservative. If you can do 0.5% risk per trade, striving to get 2% gain per month, you can have a low trade frequency, a realistic rate of return within the KPIs of good risk reward and good risk management and win rates. All you need, the last piece of the puzzle, would therefore be capital. And I think to really pursue that is prop firms. In this day and age, maybe the golden era is gone, but there's still a wonderful opportunity with prop firms. And I think just diversify yourself, understand the rules, and just trade an account at a time. Trade one account, get it to 2%, lock in that payout, move to the next. Of course, greed will get in your way and say, I want to have $1 million in funding and trade one trade on all my accounts and get a home run. You have a higher risk of denial, you have a lot more emotions involved, and it doesn't breed consistency. What is more reliable, and a lot of people are doing, is just locking in 2% per month, per account, and move on. Lock it in, secure your partials, secure that profit, and always have accounts on the side ready to load up. And the last piece of advice I want to leave you with is longevity. This is not a get-rich-quick scheme, but you can get rich slow. And I think if you really come with a perspective of what's going to give me longevity in the market, what's going to give me good habits so I can stand the test of time. It's not going to be shortcuts. It's not going to be get-rich-quick schemes like signals and gurus and so forth. Good habits, good progress, hard work, these things that you see around on the internet, these things are really true. And if you just give it a 5-year time horizon, you break it down to, I just want to learn how to do 1 or 2% per month. I'll start off with one account and I scale up from there. You can truly change your life. And the last portion is, I want to give you that nudge. If you're going through a dark period, if you're struggling or you're not seeing the light, keep pushing, because I've interviewed people that have had kids, that have had hundreds of thousands of dollars in debts, that have had multiple jobs, that have literally been homeless, and they made it out. The markets can change your life, but only if you stick at it for long enough. And before I leave you, I want to actually encourage you to go and watch another video on the channel that's going to be pinned on the screen. It's going to really help you understand as a guide where to begin and how to navigate these specific points that I've mentioned as a full blueprint and guide, step by step, with case studies and examples and data. Go ahead and check that out. Ladies and gents, as always, a restricted trader is a profitable trader.